Hi, Enis. Welcome to VC Talk. It's my great pleasure having you. How are you?
Hey Max, it's great to be here. I'm good. And what about yourself?
All good. Thank you. Thank you for coming. Very much. Thank you for your time.
Thanks for inviting me.
So, as VC Talk, we started VC Talk as an intro to the venture capital in this ecosystem for founders, early stage founders who they would like to approach the VC industry, right? To raise money and not only money, smart money as well, and scaling the business. Now, I really thank you for your time, as I said before, and I would like asking you introducing yourself and maybe your fund.
Of course. My name is Enis. I'm one of the general partners of 500 Istanbul. 500 Istanbul is an early stage VC fund that focuses on Central Eastern Europe and Turkey under the 500 global umbrella. And we've been operating the fund ever since 2016. That was our first fund. And last year, 2021, we launched our second fund, leading pre-seed and seed deals all across the region, meaning Central Eastern Europe and Turkey.
Thank you. So let me start asking. The fund is based in Turkey, but in which area and geography do you prefer to invest?
Actually, the fund is domiciled in the Netherlands. Our whole team is in Turkey, and I'm traveling between Istanbul and London currently. We cover Central Eastern Europe and Turkey, and our Central Eastern Europe definition includes regions like the Baltics and countries like other countries like Poland, Romania, Bulgaria, Greece, Hungary, Ukraine, etc. And in our first fund, we did investments in Bulgaria, Greece, Ukraine, Hungary, and Romania. In the second fund, now we're obviously investing into these countries, also including other regions like Baltics and Poland in our mandate.
Okay, so East Europe is very much your focus.
Yeah.
And how much do you normally invest?
So the fund is 50 million euros. We've invested about 7 million out of it over the past year, so we still have a lot of dry powder. Our first one was tiny, right? So it was a $10 million vehicle. From a $10 million vehicle, although we have done 40 investments, we had almost zero dry powder to do follow-on investments. So even if a company is doing really well, we couldn't do follow-on funding because the fund was 10 million. Now with a 50 million euro vehicle, we're doing 25 investments where our initial check size is about 750K to a million, and we can easily deploy another 2 to 4 million in follow-on funding to our top performing companies.
And so you are investing pretty early, let's say seed early stage.
Yeah, we even love idea stage. I mean, if you look into our first 10 investments out of our new fund, which we did in 2021, six of them were idea stage. I mean, the founders were even full-time in their previous jobs. So when you're trying to target top tier founders in newly emerging markets, then obviously to get access to those best of the best of the best deals, you have to go pre-seed, you have to go idea stage. And I think we're known for building conviction really fast. So an idea stage founder who's still full time with the previous job hasn't even quit. We can easily write the first 750K or a million ticket, and I think that sets us apart from a lot of the early stage funds out there in the region.
Yeah, I mean, this is absolutely different. Many of them, they really don't want to be committed with the idea. They find the idea so not complicated, but so risky.
Yeah, for us, the thing is we invest in founders, right? So eventually, even if we want to do deep dives, we want to look into the business model, understand strategy, understand the technology stack, or what kind of an technology inflection they're riding upon. We just want to understand those to have an intelligent conversation with the founder and better qualify and validate the founders. If we're sure of the founders, then we don't need any extra validation. But if you have question marks about the founders and their executional capabilities, whether that's from a product perspective or from a growth and traction perspective, that's when you say, hey, you know what? I'll just hold off and I want to see the product working first. Or you say, hey, I want to hold off. I want to see some momentum first. It's not because you want to see momentum. It's because you haven't actually built enough conviction for the founder. But in cases where you have built enough conviction, then no one needs to see a working product. No one needs to see traction. It's just a founder bet eventually.
Thank you. That's very nice. For me, I'm an angel. Sometimes I do my end. I understand how complicated it can be, but sounds so nice listening
Yeah.
to this. What are the top concerns and where do you find conviction when investing in the company? We've been talking a little bit about the team, the product, probably yourself as the team.
Yeah. So deep down, our investment thesis has changed over the past 6 years. If you asked me 6 years ago, I would have said team is the most important thing, but all these other things are important as well, which is not the case anymore. Currently, team is the only important thing, and anything that we look into is to better qualify the team. So from that perspective, any market that we're investing in or any company that we're investing in the founders, and we're doing a red flag review on the rest. So we're trying to see if there are any red flags. We don't have to be very bullish on the market as long as we're bullish on the founders. Obviously, there are some markets where we're more bullish upon. For example, out of our 10 first investments in Fund 2, 4 of them have been in the AI ML space. So obviously, we have an investment thesis towards ML infrastructure and we're executing on it. But it doesn't mean that I think we can invest in any company. It doesn't even have to be a bullish market. As long as it's not a red flag market, as long as we can build enough conviction that the market is deep enough or is going to get deep enough, doesn't matter what the competition is. If you like the founder, we invest, because a good founder can correct everything along the way, right? I mean, timing is wrong, she corrects it. Product is wrong, she corrects it. Even team is wrong, the co-founding team is wrong, she corrects it. So eventually it all boils down to the founder. That's why any discussion that we do is just a brainstorming session to better understand the founder's mindset. And what we try to do is we actually go deep into the founder's mindset and to understand what their actual incentive is, what's driving them in life. And I think we're building that muscle more and more. So if we go back 6 years ago, obviously we were doing deep dives. We were looking to the competitor landscape, product stack, different futures, etc. That's easy to do. Like pick up any consultant, investment banker, whatever, they're going to be able to do that as well. I mean, any intelligent human being would be able to do that analysis paralysis, but we were speaking less on the founder level. Now I feel like we're having more deeper conversations on the founder level.
You've been talking to so many founders. What really makes you convincing that they're the right one?
It's not one thing. I feel like more and more, the keyword I think is awareness. First of all, a founder has to be aware. As long as they're aware, then they can fix the things that are broken or things that they lack, either from a character perspective or from a skill set perspective. They can find add-ons in the team or as co-founders and fix those, right? So awareness is very important on a founder. Most of the cases, founders are very strong in a couple of things, and then they're not really strong on all these other things, which is the founder type that I like. The founder type that we don't invest as much, obviously we do some, is more well-rounded founders who are not 10 out of 10 in anything, but rather 8 out of 10 in a lot of things. So they're really well-rounded. If you put on for example, on a football game, like a FIFA or a football manager game, you would see how well-rounded their hexagon is going to be. We tend to do less of those investments, yet we do as well, as long as there's awareness, as long as we feel like the founder is aware that although he or she is the best person to lead that company at the current stage, as time will pass and the company is going to grow, if you're the best person to lead product at a 10 people business, you're probably the worst person to lead the product at a 100 people business. So I think if there's one word, that's awareness. But if you want me to standardize the founders, this one thing that we look into, it's awareness and then being really good at a couple of things rather than being okayish good at multiple things.
How important is face-to-face when it comes to investments? It is not being geographically close to the founders. It's a limitation.
Yeah, so it wasn't a thing for us, right? In Fund 1, when there was no COVID, this was 2016, 2020, so the COVID wasn't around. We did 12 investments in Central Eastern Europe. I think 7, 8 of them, we haven't met face-to-face. And this was okay. This was okay because also within 500 startups, we had the SF San Francisco and the Mountain View accelerators back then. They weren't meeting face-to-face either, right? So they're having couple thousand applications come, they do Zoom calls, one meeting, second meeting, give a term sheet or not. So we were used to that. It wasn't that off for us. But now I'm leaning towards the other side. I'm leaning more towards face-to-face, not just because I want to meet face-to-face with the founders to better qualify them. That's part of it, of course, but also meeting face-to-face makes you win a deal. It's really important to build that human level connection with the founder so that the ones that you actually build conviction upon, you end up winning that deal. We lost multiple deals over the past couple of months, especially in Central Eastern Europe, to all of these top tier funds, especially the ones that are looking to Central Eastern Europe from the Western world, either the UK or the US. So we had to build some resolutions so that we actually start winning deals. And one of them was, hey, you want to give a term sheet, book a flight the next day, take a flight from Istanbul to Tallinn or from Istanbul to Warsaw, give that term sheet face to face so that you're going to spend that one day with the founder, build that connection, which is going to increase your win rate tremendously.
I agree. And how often do you like to meet with the founders before and after investing?
So before we invest, I think the fastest times we invest would be 2 meetings. Normally, it's more like 3 to 4 meetings. We have these sort of rules where if you're meeting with us for the second time, a GP leads the discussion. So a decision maker has to be in the room in all of the second, third, fourth meetings. Our team is really horizontal. If there are, I think, 3 things that differentiate our team is we're really horizontal. We have full autonomy. Everyone has their own autonomy to run their own things, and everyone is focused on deal sourcing. So even if our CFO, who does financial audit, etc., he's doing 60% deal sourcing, or our talent manager, who's supporting the portfolio with everything around talent, she's doing 50% deal sourcing. So our sole purpose of existence as a company and as a fund is to do deal sourcing. So from that mindset, we tried to optimize for the founder experience. And what we came up with is, obviously, we're a 9-people team. Everyone does deal sourcing. But as I've said, if there's a second meeting, there's always a GP present. Second meeting onwards, there's always a GP who's leading the conversation so that you can pull the trigger much faster than your competitors. Second thing, if we're doing a second meeting, we always do a deep dive beforehand so that we're knowledgeable about the space. We know some of the competitors, we can ask the right questions. So it's not like the second meeting or the third meeting, someone comes and says, hey, so tell me a bit about yourself. I want to learn about your background. No, we should have already got that covered beforehand. So we looked into our funnel, top of the funnel, reaching out, doing a lot of outreaches. We screen 5,000 to 6,000 companies per year in the region. We do about 2,000 first meetings, etc. So we try to, on every step of the way, we try to optimize for the founder experience.
Hami, how involved do you get with your portfolio? And let me ask, how do you add value to your investments?
Yeah, in our first fund, given that we were a 2-people team deploying $10 million fund, the only thing that we optimized for was follow-on funding. So the 2 things, actually, the 2 pillars that I value the most that a VC can give to a founder is either the mental support and founder coaching aspect of it, or follow-on funding. So we don't want to go to a drawing board and talk about business strategy or go to market or how this company is going to position its product compared to all these competitors out there, because we can't. If us spending like 6 hours out of a week or a couple hours out of a month is going to be valuable to the founder, that means we've backed the wrong founder, because he or she is spending his life or her life to that company, and then us coming from a bird's eye view, looking to the market after doing a couple hours of research and giving our shallow opinions, we're not that people. We don't want to be that people. But follow-on funding, that's one thing where we can easily help, right? If I'm gonna spend 1x of my time and help the founder by 10x, then I should definitely do it. But if we're gonna spend 10x of our time helping a founder where he or she can do it in 10x, then we try to make him or her do it. So follow-on funding, we were really prolific. If you look into our fund 1, out of 40 companies that we invested in pre-seed or seed, 36 of them were able to raise Series A, and they raised a total of $1.5 billion in total, these 36 companies. So follow-on funding is definitely there. The second thing, like mental coaching, founder coaching, whatever you want to put it, or psychological support, it's there for us to A, give comfort to the founders, and B, to help them draw analogies into different difficulties that we see across the portfolio, which really helps them, I feel like, mentally. So those are the 2 pillars. Now we're trying to build a third pillar, which is talent. With the new talent manager on board, what we're trying to do is we're trying to have a short list of different fields. For example, best React engineers, or best people who are doing front-end UI. Have these short lists of the best people along the region, so that whenever one of our companies is looking to get someone to the leadership team, this has to be obviously like high quality people. We can just give them a short list of 20 people, 30 people that they can go and poach. So we're trying to do a lot of talent mapping, build that database of different functions, and then be able to provide them to the founders whenever they need it. And then obviously they do the rest. They do the poaching, they do the interview. They hire them or not is totally up to them, obviously.
Will you be leading investments?
Yeah, we lead about 70% of the deals. So the deals that are here in Turkey, we definitely lead almost all of them. Deals in Central Eastern Europe, we try to lead. I would say 50-50, 50% of the time we lead, 50% we co-lead. And then diaspora founders, so the founders who are based in the UK or the US, we don't want to lead as much. We want to co-invest with local funds out there. So I would say in the companies that we lead, we try to get like 12 to 15% ownership by leading around. In the companies where we co-lead or co-invest, we try to get 5 to 7% ownership.
Okay. What will you do to have the startup you invest in when they move to the next round? As you said before, they move to the A round. Do you get involved, helping them, giving them introductions?
Yeah, of course. So we have a huge VC list, right? I feel like any VC you want to reach out to, we easily have a second degree connection to a warm introduction. That's easy for us. So the way we structure is we look into our own database, make a list of 80 VCs who are relevant. For example, if you're a fintech founder based out of Estonia, so we would gladly look into A, the Baltics funds, make a list of them. B, European funds who also do Baltics investments, make a list of them. And then globally oriented fintech funds, make a list of them and say, hey, these are the 60 or 80 VCs that we can do warm introductions with. But if you have a hit list, if you feel like these 20 VCs or 30 VCs are highly relevant, who are not on this list, then we can easily get introductions through the 500 Global Network. So that's one thing that we actually support really well with.
I mean, someone does it for what has been my experience, but how do you expect your investments to help your portfolio? I mean, should your portfolio company have some kind of interaction?
Yes. Again, I value that founder to founder interaction a lot. So it's less on like the business development or partnership side. It's less that, oh, these two companies can become partners and then they can grow together. It's more on, oh, these founders should know each other. So whenever they need founder coaching or psychological support, they have to be friends. So we're trying to have this close-knit group within our portfolio. So a couple of things we do to facilitate that. We obviously have a Slack channel where the whole 500 global founders are there. So if you need something, there are these different channels you can post there. We do weekly webinars within the 500 portfolio. So if you want to talk, if there's a session on referral marketing or B2B pricing strategy, just go and join that webinar. But apart from that, we also do these local founder dinners. 500 MENA has done one in Egypt. We do one every 2 months here in Istanbul, where founders meet for dinner. They chit chat for 3-5 hours. We have a common WhatsApp group so that they become friends, so that it would be easy for them to get a hold of each other. So I think that close-knit group helps a lot founders mentally, and that's why we're trying to facilitate. So it's less on the business development or sales side of things, but more on the founder-to-founder interaction, because they're going through similar problems. Chances are all of them face similar issues along the way.
I know maybe you don't like this, but what happens if they fail?
Nothing, life. We like to back founders who are going for outlier winners, right? We're hoping that some of these companies are going to become billion-dollar companies. If you look into our fund one, we have 30 companies, 3 of them are unicorns. What that means is these founders should be willing to take that risk. A good founder isn't the one who looks into his options or her options and says, hey, I'm going to take this bet. It's going to make it 50%, because chances are a bet that's going to be positive outcome 50% of the time won't going to give you that 10x return. It's going to give you a 2x return at best. Whereas other founders take these 5 to 10% bets all the time, but when it hits, it doesn't give you 1 to 10x or 1 to 20x. It gives you 1 to 200x. Our portfolio is constructed like that. So the founders who failed, giving it a chance to become outlier returns, yet they couldn't deliver life. We want to bet on those founders. The worst, I don't want to say the worst founders, but the most founders where I become most discouraged with or disheartened with are the ones who don't take those bets, but rather have the stable environment where they're trying to grow steadily. But if you're trying to grow steadily, you can't become a billion-dollar company in 5 to 10 years. You don't have to. Not every company has to become a billion-dollar company, but at least that's our investment thesis as a fund.
Okay. This is personal. Why did you become an investor?
So I think initially why I became an investor was I was trying to go out of my old life. I was doing heating, ventilation, air conditioning, all this stupid stuff. Like 7 years ago, I did that for like 3-4 years. I was trying to get out of it. I had some capital, so the easiest way for me to divert my attention and build a skill set on this new area was to do angel investing, which then turned into a fund. So initially it was me trying to escape from what I do. Along the way, as I question, why am I doing this? Apart from all the financial aspects, there are obviously financial aspects, but I think in this capitalist environment, job consumes people. Job becomes people's main thing in life. They spend 8 to 10 hours. If you can provide meaning to people's jobs, it actually allows a lot of meaning to their lives as well, because the job is having a job is one of the cornerstones, one of the pillars of what life means to a lot of people. And as a VC, you backing entrepreneurs means that chances are a lot of the people who are working for these startups that we've backed, hopefully we're adding meaning to their lives through their jobs.
Which are the critical points that really trigger your decision to invest? I mean, there is the moment we say, okay, that's the guy.
I think one of the thing is you have to make sure that the founder is smarter than yourself. So I always try to find founders who are smarter than me and make sure they are. Sometimes they're not. Sometimes like 3 6 months later, you're like, oh shit, maybe it wasn't the case. But in having a conversation, when you realize that okay, this guy or girl is really smart, way smarter than I am, that actually I think can easily change your decision from 0 to 1. Because if that was something that you haven't felt before and now you're feeling it, that really changed it. Second is, I think, awareness. So seeing that the founder is able to get a bird's eye view on himself or herself, just like a third person looking into the opportunity can identify where the risks are, sometimes even on a character level, see where he or she lacks just from a character perspective, I think adds a lot. So second would be, first is making sure he or she's smarter. Second is founder awareness. And the third is domain expertise. But I think third in and of itself is never enough. A lot of people have domain expertise. They're not cut out for the job.
I mean, maybe there is, maybe there isn't. But what's the perfect recipe for a great pitch? I know how you
Great
have
pitch.
so many.
I think a great pitch and a great meeting is one where you drive the investor to a binary decision. The meetings where you cannot drive the investor to a binary decision are the worst for the founders, because if an investor feels like they have the leverage to wait, they're going to wait. Time is their friend. It's not their friend. It's not your friend, right? So in any meeting, in any VC meeting, in any investor meeting in general, you should try to drive to a decision. So things like oh, we're not fundraising yet, or oh yeah, we'll let you know when the round comes together, or things like okay, we'll do our product launch and then we'll start raising our seed round and we'll get back to you, etc. These I think give the upper hand to the investor as opposed to the founder, which shouldn't be the case. So the biggest advice that we give is to our founders is have these pseudo deadlines, pseudo milestones, and make sure that the investor feels like they either invest today or if things go well, they're never going to be able to invest again. Of course, if things don't go well, everyone can invest always, but that's not what an investor is optimizing for, right? In our region, because there's lack of capital, in a lot of the cases, investors don't feel that pressure. Even if a round is closing, you can be like, okay, close this round, I'll look into the next round, see how you grow, because they know that they can still get in the next round. Isn't the case in the US. In the US, as a seed investor, you're either in at seed or you can join at Series A, but potentially those are not the best performing companies.
It also becomes very expensive.
Yeah, it's not the price, right? So I think if you know that you can enter in the next stage, then I'd wait. So it's never that it becomes more expensive that makes you feel FOMO. It's more like, oh shit, I either invest now or it's gone forever. That builds the FOMO.
Yeah, I agree. How important is that IP belonging to the startup to attract venture capital investors? For example, there are software where they buy almost everything from that side in outsourcing.
Yeah, we're okay with it. We mostly, a lot of the modes that our companies have are less technological modes and more business model driven modes, whether that economies of scale, network effect, branding, whatever it may be, or the distribution channels that they leverage. It's more deep rooted into their business model and strategy rather than their technology. Even some of our deep tech companies are like that. We have a couple of deep tech companies where the proprietary IP and the talent in the team, so the cornered resource and the product and the IP along with the product becomes the biggest moat. We have some of those, but not mostly.
I mean, what's your suggestion to founders when they approach a VC? There are many founders, they have no idea how the VC industry works, right? So how they should approach the VC? What's the attitude?
Yeah, so founders, I mean, I think VCs are always out there. We're always looking for deals. Our KPI for all of our team members is to do 5 to 6 first meetings a day, which is tough. So we're always on the lookout, right? When I say, hey, we screened 5,000 deals last year, it's not like 5,000 deals came to us. It's more like 500 deals came to us, and then we were out there looking for the rest 4,500 of the deals. But I think always the best way to get an introduction to a VC is through warm introductions. We can easily dismiss cold LinkedIn messages or cold emails. It's not because the founders are bad, it's just that our perception of them is bad. Not the case in the US, by the way. In US, a lot of the investors have this story where they failed to reply to this one email or this one LinkedIn message, and then the company next year you look at it, it becomes a unicorn, right? We don't have those stories. We don't have those hurting moments in Central Eastern Europe and Turkey. So I feel VCs become much more dismissive here when a founder reaches out cold. But we're not like that. For example, us as a fund, I have an inbox zero policy. I respond to every single email on the same day, if not the next day. So my inbox is always zero, and we reply to every single founder message. It's also part of your branding as a fund. But then again, when something comes with a warm introduction to a common mutual friend or a founder, especially, then you take it with like really high degree of importance.
I mean, you have enough experience, a lot actually. May I ask you, what makes a startup a unicorn since day one? I think you can find some perception. Actually, this guy can be 1 billion one day.
So looking at it from, so a lot of things make a company a unicorn, right? There can be a lot of ingredients. If anyone knew the formula, then for example, all of Sequoia's fund would be doing 20x, which isn't the case. But I think what the biggest question is, what becomes the main bottleneck that a founder, even if everything's going well, can't become a unicorn? It's important to identify the anti-unicorns as opposed to unicorns. And what I mean by anti-unicorns is the product is right, the market is right, the timing is right, they got seed funding, they got Series A funding, they are growing fast, yet they fail to become a unicorn. Those are more ingrained into a founder's mindset, where the things that made a founder get to Series B, actually, as the value of the company increases, the opportunity of failure for a founder also increases. So the founders become more risk averse, and then when they become more risk averse, they can never go to hyper growth. And then you see all of these technology SMEs all around the place who are doing multi-million-dollar MRRs, but they've lost that train. They've lost that market opening, which was there 3 to 5 years ago, and now they're just a 100-people organization doing a couple $1 million MRR, never to become an outlier success story. It's important to identify those. So once everything is in order, and it's impossible to make sure that everything's in order, but if it's impossible, everything's in order, you want to make sure that it becomes a unicorn, right? And then in these cases, everything becomes in order, yet it still can't become a unicorn, I think, which is the toughest thing to crack. That's why we try to go deep into the founder mindset to understand their mandate, their incentives, what's driving them, so that if by luck, by chance, everything is in place, we make sure that the outcome becomes an outlier outcome.
I mean, there are startups who very struggle even to get 100,000 in funding. There are other founders that get 100 million less than an MVP. What really makes the difference? How they pitch, who they are, the idea.
The same thing goes to public markets, right? There are companies with the exact revenue, exact number of sales who are now $1 trillion companies, whereas you would see an exactly similar company doing even more sales who's valued at 1/10 of that. And it's eventually driven by the leader of the company who yeah, so there are multiple examples there, like in every space. I think the leader matters a lot. Leader matters a lot in terms of being able to, what's the job of a founder? A job of a founder is to remove obstacles, whatever that obstacle may be. Initially, it might be a technology obstacle, so he or she might be coding. Then it might be customer discovery obstacle, so he or she's doing customer discovery calls. Then becomes sales, hiring, fundraising, etc. Eventually, it's all about removing obstacles. And what's even better is people removing obstacles for you, which makes you a great leader. So then you end up being able to hire people better than yourself, who are going to remove obstacles even faster than you can in these all different areas. So being a good leader, having the narrative in place, means you can actually fundraise much better. And capital, believe me, removes a lot of obstacles. And capital even builds moats that doesn't exist in the business. it can easily build those moats. So that changes a lot. You can easily hire top talent who can also hire top talent. If as an A player, if you can hire A players as an A player, then the whole organization becomes A. But if you hire B players, then they end up hiring C players who end up hiring D players. And the whole quality of the organization, just from a team perspective and human capital perspective, deteriorates. So I think it's really personal. And that's what makes it more exciting. This is not a commodity job. This is not like two factories who are both producing God knows what, who are trying to compete. This is much more human driven and dependent on what humans can deliver at scale.
Yeah, I would like to close with, it's been a very nice talk. What will be the best sector in 2022 to invest and for the founders themselves to create?
We've invested a lot into ML ops, which I believe is obviously it's all trending up and it's going to continue to. And I think applied ML on all these different industries are going to continue to have more adoption in place. So we did less applied ML, but I think we're going to do more. And this is really industry agnostic, right? Any single industry that you're going to look at is going to, and any single technology company, by the way, in those industries that you look at are going to slowly get disrupted by players who are more ML native.
Enis, thank you very much for coming to VC Talk. It's been a very great pleasure for me.
Thanks a lot for having me, Max.
Thank you so much. Take care.